In reality, though, the war over Ukraine just makes the inflation situation worse. A shortage in oil is already leading to higher prices at the pump. Ukraine's also the fourth largest exporter of wheat and corn, so the grain complex will go higher, too. No relief. That means the Fed will be even under more pressure to raise interest rates. So when Jay Powell goes in front of Congress on Wednesday and Thursday, he's likely to extend sympathy to the people of Ukraine, as I do. But I don't see him relenting in his mission to kill inflation now. It doesn't help that stocks are still expensive on a historical basis, at least according to Warren Buffett, who opined on a lack of good value in his weekend letter. And it doesn't matter if more people return to the workforce as Omicron wanes, because even without the labor shortage, the war means we need to worry about energy and food shortages. So why not just run for the market? Whoa. I'm in favor of raising some cash, which is always a good idea if you don't have any. We already did that for the Travel Trust, which you can follow by joining our club. We're in a seasonally strong moment. Remember what Larry Williams told us last week as we went over, right? And we had a huge bounce late last week to the point where you could argue that we were due for profit-taking. In the end, I think that we have to choose, not between Russia or Ukraine, or a hardline Fed versus softline Fed, but whether stocks have gone down enough to be able to handle what either Powell or Putin throws at us. Have they gone down enough? To me, it's a very tough call. We have a huge number of high-quality stocks that have given up meaningful gains and a large number of newly public stocks without any support that have gone down substantially. The latter can be seen to have periodic rallies, but I think they'll still end up lower. I like a good RX tonight. The former, though, the high-quality stocks like that of Workday, which reported a stellar quarter this very evening, seem poised to run on any good news, like any sign that inflation might be peaking. We will hear from Workday's co-CEO, Neil Bushry, tonight. I think his stock fell way too far versus the numbers that just printed. Here's the crux. If you thought inflation may be peaking and therefore you had a good chance to buy dividend stocks or healthcare stocks or tech stocks with high multiples, then Putin's war means you no longer have anything to cheer about at all. It's a cruel, heartless event, a humanitarian tragedy. From the stock market's point of view, from its perspective, it's also real bad for inflation. Which brings me to the bottom line. We live in the United States, not Europe. Newsflash. So the takeaway for us is that Fed Chief Jay Powell may have to acknowledge that this war has created more inflationary pressures, meaning he'll have to stick with the harder line he adopted last November, the one that's been the death knell for high-flying stocks and a chief obstacle to this market's ability to mount a sustained across-the-board rally.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.